They are the juggernaut in several industries. So I think we're going to see Tesla being probably 3 to 5 times bigger in the next 5 years.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'm reacting to long-term Tesla bull Ross Gerber, who believes that the Tesla Juggernaut could see the stock increase up to 5 times over the next half a decade, which isn't too far off my own prediction of a 6x. And I'll also be reacting to some comments from long-term Tesla skeptic and Elon Musk detractor, Edward Noodle Doodle. I think I said his name wrong. Anyway, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
The numbers looked impressive. Give us your take.
Well, I mean, these numbers were even better than I thought, and I'm considered, one of the bigger Tesla bulls. So I was really pleased to see Tesla increasing their margin. It looks like the few Model S Plaid sales they had really helped goose margin, as well as just excellent execution in the scale of the business now, having the highest profit margin we've seen for Tesla Automotive. So we're really excited about the numbers.
We're quite used to the regulatory credits pumping up these figures. They almost flattered to deceive, but actually they only made up a relatively modest part of the revenue this time round here. So,
and this gets me every time. I don't know how people keep regurgitating this stuff. Now, for those of you who don't know, let's say in the last 3 quarters, Tesla has brought in over $10 billion worth of revenue. That's 10 followed by 9 zeros. There's 3 commas in there as well, just for those of you who can't picture that number. That's 10 billion with a B dollars. Automotive regulatory credit sales have accounted for at most a few hundred million, that's million with an M, 2 commas, not 3, in those same quarters. Maybe 2-3% of total revenue. It's just so strange. It seems like no one is willing to do their homework. This is even worse than the competition is coming, because the evidence is already here. We're not talking about some potential possible future event. We're talking about something that you can verify. Hang on a minute. How much regulatory credit income did Tesla bring in this quarter versus total revenue? Oh, you mean it's only like 2%? Oh, I guess I shouldn't listen to Gordon Johnson.
Does this set us up for a successive series of better revenue and profit numbers, do you think, going forward?
Now, I don't want to be too hard on Yankee here. Maybe he's just trying to make conversation, but even the Tesla bears know the answer to this question. Tesla is going to crush their quarterly records for consecutive quarters for years to come. Q3 is going to be better than Q2. Q4 is going to be better than Q3. Q1 2022 is going to be better than Q4 2021. This is going to keep going on for literally years to come. I mean, this is an absolute no-brainer. They're scaling their production. Like, it doesn't take a genius to figure this out. There's going to be more revenue, more net income, more vehicles sold, more vehicles produced quarter after quarter after quarter after quarter for years. Maybe it's just giving a softball to Ross Gerber.
Yeah, absolutely. I mean, you just ran the clip about Elon talking about the constraints with chips, which is a real issue for everybody. But when you look at the fact they're not even really selling Model S or X's right now, which is their high margin car, and they have the capacity to do 80 to 100,000 of these cars a year in a typical year, the upside for Tesla in the second half of the year could be substantial if they're able to get these Model S's produced and out. And so it's been choppy, that production line, but boy, it contributes a lot. And so when you think out over the next 12 months, if they can alleviate some of the supply shortages of chips, Tesla's just killing it. There's no other spin.
Yeah, look, Ross, I think we can all agree it's doing really well. And the margin improvement, great. I think we can all ignore the Bitcoin story as a sideshow, at the moment at least. Anyway, but 114 times forward as well. I get that it's a good company. I get that it's a trailblazer. I get that Elon Musk is an extraordinary, colourful gentleman who you just can't not listen to as well. But 114 times forward at this stage when there's a hell of a lot of rivals coming up the rails on electric vehicles.
This just does my head in every time. Do people not understand how ridiculous and absurd this sounds? Like, if you actually examine the so-called rivals, the potential competition, you look under the hood, shout out to Sandy Munro for the great teardowns, you look at the specs, the numbers, like everywhere you look points to the fact that there is no credible competition anywhere on the horizon. This is as absurd as a needy, nice guy, friend zone dwelling, beta orbiting, please a bitch, adult virgin, suddenly proclaiming that women are going to start throwing themselves at me, bro. Just you wait and see. You just cannot credibly make these kind of claims until you have some supporting evidence. Oh, and by the way, I know I've probably triggered a few nice guys ready to tell me in the comments how butthurt they are. You know, the kind of guys that think it's a good idea to bring flowers on a first date. You know who I'm talking to. Well, feel free to let me know how I have offended you, but just a quick question. Hey, bro, is what you're doing working? Are you dating the kind of women you want to be dating? Anyway, moving on.
Yeah, but you also have to look at it a little different. First of all, their growth rate is 100%. So actually their PEG ratio is 1, which is actually low for the market. And you have to also look at what's happening with Texas and what's happening with Berlin. So they have already the installed base to double production in the next 12 months if they're able to get the factories up. So I 100% agree. This is not a cheap stock, and it certainly values Tesla's success and dominance in the EV market. But what it doesn't value is the upside of what Elon was talking about with this autonomous EV fleet of the future. When you really think about the technology that they have, whether it's in cell production and battery production or full self-driving, you know, they are the juggernaut in several industries. So I think we're going to see Tesla being probably 3 to 5 times bigger in the next 5 years.
I love the way that Ross phrased this. Tesla is the juggernaut in multiple industries. I think this is a great way of phrasing things. And as Ross says there, 3 to 5x over the next 5 years. That would be about a $3.5 trillion market cap, $1 trillion more than Apple is currently worth today, the world's most valuable company by market cap. This will put Tesla stock at around $3,500, $3,500 per share of Tesla stock. This is pretty close to my own prediction of about a 6x increase, which puts Tesla stock at $4,200 per share at about a $4.2 billion market cap in 2026. Interesting to see Ross and I are on the same page. I've always seen myself as much more bullish even than Ross Gerber on Tesla. Turns out we're actually not that far away from each other.
So there's enormous upside. That's why it's the top holding of my fund, GK, listed on the New York Stock Exchange and at my firm as well as far as an individual stock.
And now it's time to hear from long-term Tesla skeptic and Elon hater, Edward Needle Doodle. I can't pronounce his last name. I don't mean any disrespect. I just literally don't know how to say his last name. Sorry, Edward, if you're watching, send me a DM, let me know. Just do an audio recording. So in the future, when I can refer to your ridiculous, absurd thoughts, I know how to say your name correctly. So here we are over on Edward. Sorry, I can't pronounce your last name, bro. Don't hate me. His Twitter profile. Just wanted to give you guys a sense of his intellectually rigorous thoughts around Tesla and his obvious understanding of both engineering and physics, just to give you guys a sense of where he's coming from. Quote, "Now that Tesla is finally achieving something close to real auto industry scale, they aren't able to leverage it because of decisions like making 2 versions of Model Y. Having designed one that actually does leverage Model 3 part scale, they are making a whole new version. Whatever the benefits of the 4680 cells and structural battery packs might be, they're unlikely to outstrip potential economies of scale that would have been provided by high parts commonalities between Model 3 and Model Y on a global basis. Sharing parts is how you make money on cars." So I just want to take a quick moment to discuss this. This is one of those points that on the surface might actually seem, you know what, that makes sense, right? If they share parts, economies of scale, that's a good idea. Why aren't they sharing parts? What's going on? Tesla are dumb. But we actually need to think a few layers deeper than this. I know it might hurt sometimes to think that hard, but it's actually important to do this before we draw any conclusions. Number 1, the most important point here is that over time, I know this might come as a surprise to Edward, but hey Edward, you might not have noticed this. Tesla actually integrates the developments from each iteration of their vehicles into the current generation and prior generations. You know, the whole heat pump octo valve that first appeared in the Model Y? That's now integrated in the Model 3, making them even more profitable. Tesla continues to iterate. Rather than just making one vehicle and leaving it exactly as is, every newly produced vehicle in a new factory is a new version, a new design, where they're testing out and improving some of the underlying technology, at which point in the future, they can also integrate that in their other products. This is how you iterate and improve your products, and most important of all, drive your costs down further. Second of all, It is astonishingly embarrassing. Like, honestly, like, this is some serious bell curve stuff right here that Edward doesn't understand the significance of the cost and time savings of the huge cast pieces and the structural battery pack featuring the 4680 cells. I could do an entire deep dive in terms of the engineering around this, but suffice to say, engineering is not Edward's strong point, nor is automotive manufacturing. He doesn't understand, again, on the surface, it sounds good. Yeah, if they share parts in common, they get economies of scale, that's great. But he's making these absurd proclamations that this new technology that saves weight, time, enormous amounts of factory floor space, blah, 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 keep going on and on, isn't going to more than compensate for parts in common, and then also completely fails to recognize that, hey, Edward, spoiler alert, you do realize that the structural battery pack is going to end up in subsequent versions of the Model 3 in the future anyway, right? Like, you do realize that's going to happen. Oh, and I'm sorry to rain on your parade here, but I'm still not done poking holes in your logic, Edward. I'm so sorry to do this to you, but it's actually an important point because these kind of arguments will come up. They'll propagate, especially through the basements of the TSLAQ self-hating adult virgins, and I really want to make sure that people understand the argument here. Besides the fact that even Elon Musk has repeatedly stated that he believes quite strongly that the Model Y alone will sell more units than the Model 3, the Model S, and the Model X combined annually. It doesn't take a genius to figure this out. I mean, if you look at the different vehicle segments in the market, compact SUVs are a huge portion, sedans not so big. I mean, this is fairly self-evident. Now think about this a little bit, Edward. I know it might hurt, it might be hard, but it's important, okay? Let's say that per year, Tesla has total annual demand for the Model 3 of 500,000 units, but they could sell 2 million Model Ys. What's more important, Edward? Sharing some parts in common between the Model 3, this very low volume vehicle, or focusing engineering efforts on dramatically reducing the costs, the complexity, the time to produce the much higher volume vehicle. Now, I know this may be outside Edward's pay grade here, so let me give you guys just a really basic example of how this might play out. Let's just imagine that by using parts in common between the 3 and the Y, the Tesla could save 10% on the cost to produce the Model Y. To be honest, this is actually an extremely generous estimate. It's much likely to be less, but hey, let's use a very generous 10%. But what if instead of using parts in common, Tesla could instead focus all of their engineering efforts and apply those big brains to developing new techniques, new technologies, including new materials, new ways of manufacturing the Model Y that could overall reduce the cost to produce the Model Y by 20%. Which of these scenarios would be better for Tesla overall? This proves what... Oh, shit. I love the confidence. This proves what industry folks have known all along. Shout out to the likes of Bob Lutz. There is no pot of gold at the end of the rainbow for this company. The cash in on years of brand equity simply isn't happening because the culture isn't focused on making money. Only the FSD scam keeps profits in play. Where do we even start? Okay, so I hate to point out the obvious here, but I do need to do this because I hear this argument come up over and over and over again. Admittedly, it's generally only coming from people who have their head firmly inserted up their own behind, but it is worth talking about. In the early days, Tesla was focused aggressively, solely on growth, scale. Now we're starting to see some of that operating leverage come into play. If Tesla was trying to make a profit from day one, they could have done that, but they would have remained a very small, irrelevant company and not been able to achieve their mission of accelerating the world's transition to sustainable energy. Instead, they could have just supplied a few powertrains, sold a few luxury vehicles, made some profits, appeased some dopey investors, and everyone would be happy. But that wasn't their plan. Their plan, as they've stated repeatedly, they're trying to get to 20 plus million electric vehicles sold per year. So, how do you get to 20 plus million electric vehicles sold per year? Well, you start by investing very aggressively in reaching scale, and you continue to do that. And eventually, at some point in time, when it's not going to be counter to your ability to scale production, you then open the profit floodgates, which we're now starting to see happen. It is true that Tesla's culture isn't focused on making profits. Instead, Tesla's culture is focused on achieving their mission. And how does Tesla achieve their mission? I know this might require some thinking, it might hurt a little bit, but it's again very important to understand this. Tesla achieves their mission by 1. Reaching scale and continually driving the cost of their vehicles down. This is an integrated process. The more scale you have, the lower your vehicle costs, the more technology, the more innovation, the cheaper they get, more people can buy them, you achieve your mission, blah, blah, blah. And 2, while doing so, stay in business. Later come the profits. But yes, it's true, Tesla's not focused on making profits. This will be an eventual after effect of achieving their mission. I know this might be a little bit hard to understand, but this is how things play out. Let's look at some data to try to illustrate the point. Here we are over on HyperCharts looking at Tesla's vehicle deliveries. Notice the trend, they're increasing. Remember their mission, accelerate the world's transition to sustainable energy, and the way that they do that is selling more and more vehicles and other products over time. So that part of their mission is on track, right? It's accelerating, it's increasing. They're winning, their mission is being achieved. Now we look at Tesla's revenue. Notice the trend. In line with increasing their scale, and of course driving their costs down, which is why they're selling more vehicles, etc., their revenue is also increasing. And now we get to the juicy part. Tesla's revenue and operating income. Now notice over here in 2017, Tesla was, quote, losing money. Why was Tesla, quote, losing money? Because they were trying to get to this part of the graph over here. I know this is really complicated, but it's really important. Ready? See these negative quarters here of negative operating income? They had to come before the positive quarters that we're now seeing. Anyone notice a trend? That's right, a growth in revenue, a growth in gross profit, and a growth in operating income, aka actual profit. We can see this illustrated even more clearly here when we just look at Tesla's net income. Tesla wasn't focused on making a profit here, they were focused on reaching scale and driving their costs down, which is what they've done. And now suddenly out of nowhere, we start to see enormous amounts of net income, aka profit, every quarter. Tesla, $1.142 billion of net income in Q2 2021. Had Tesla been focused on, quote, profit from day one, they would never get to this stage. I'm going to be honest with you guys. This is one of those things that's just puzzled me. I continually hear for years, I've been following the Tesla story and I've been hearing from the TSLAQ folks that Tesla can't make money, they can't make a profit. And I just don't understand how these folks can't understand what's going on here. Step 1, don't make money, but instead invest for growth. Step 2, grow. And step 3, make money. You don't start at step 3 or step 2. You have to start at step 1. You do those in sequence and then you get to printing billions of dollars every quarter, which we're now seeing Tesla doing. It just puzzles me how people haven't been able to grasp this concept. It's quite simple. What do you know? A random retweet about Tesla's on fire. Fancy that. Here's a gem from August 2nd. Quote, wouldn't it be cool if Tesla could like swap batteries or something? Just pop a new one in there and drive away. Maybe the idea is just too disruptive for a linear thinker like Elon Musk. Now, is it just me or does anyone else seem to get the sense that Eddie here seems to hate himself, hate anyone who's more successful, project his insecurities? He's trying to bring down Elon Musk, like suggesting that he's a linear thinker. Like, why even say that? I mean, honestly, it seems like the emotions are a little bit involved here, Edward. Now, just want to clarify why Tesla would not pursue battery swap technology. I know this may require a few standard deviations more than are currently available, but I will do my best to make this fairly simple. Let's dumb things down a lot, okay? Tesla today can't actually get enough battery cells to put in all the vehicles that they want to be able to sell to customers. There's more demand than they can currently meet, okay? Step 1, Tesla cannot meet demand because they don't have enough battery cells. So let me ask a question. If Tesla were to introduce battery swap technology, when there was a battery waiting to be swapped into a Tesla, what would it be doing? Nothing. It'd just be sitting there not being used in a vehicle, right? Now, here's the question. Is it better for Tesla to have a big stack of 10, 15 batteries sitting around waiting to be swapped out when a user happens to come by and go, you know what, great time to swap my battery out now. I don't want to wait for charging. I'm just going to swap my battery. Is it better to have these batteries sitting there not being used most of the time and just available for when someone wants to swap them out? Or would it make more sense from a business point of view instead? Now, I know this is a big step, but try to come with me here. Would it be better instead for Tesla to put that battery in a new vehicle and then sell that vehicle to a customer, given the fact that their mission is, after all, to accelerate the world's transition to sustainable energy? And Edward seems to be so fixated on Tesla making money and making profits, which would make more sense given the fact that they have a limited battery cell supply. Have a bunch of batteries sitting around idly by, waiting to be swapped out, or to put those batteries in cars to sell to customers who can then charge the vehicle at home and or a supercharging station. Just asking the question, dude. Oh, and by the way, guys, I just want to be really clear here. I don't have anything personal against Edward. I've never met the guy. I don't know what he's like. But a good person can say dumb shit. And this is what I'm going after. The dumb shit that this guy is saying. Because it is truly embarrassing. And the reason that I'm using silly names and personifying some of these thoughts is simply to illustrate how ridiculous some of the things being said truly are. What can I say? I feel compelled to ridicule the ridiculous in every way I possibly can. Speaking of ridiculous,
it's going to be an interesting print given all of the tentpole signs we see of encroaching competition. Lucid's trading today. I know you're watching Mercedes. What do you think they're going to say? What do you think they need to say?
Well, I think they need to shore up some confidence around sort of what's happening with the 4860, their new battery form factor, their new structural pack. I think there's a lot of questions about that. They raised a lot of hype about that around Battery Day, which was a while ago now. And the signs that we've gotten, or the guidance that we've gotten from them since, has been a little bit hard to read. So I think that's definitely one area. And then, of course, just Europe is on fire right now. Both sort of how things are going there and really what the plan is besides just building a factory. I think thus far we've heard, sort of like the idea that this factory will just sort of solve all their problems in Europe. And they really need to make sure that they're making the most of that market while it's as hot as it is.
Right.
I don't want to be too hard on this guy. I mean, I'm sorry, Edward. I think I've been a little bit hard on you. I'm sorry, my friend. Nothing personal here, but I'm just trying to understand what in the actual this guy's talking about. Like, I don't understand where he's coming from. Tesla's building a factory in Europe. Ultimate production capacity of 2+ million vehicles per year. This is going to dramatically reduce the cost of selling vehicles in Europe. This is going to dramatically expand their overall market because the cost of Teslas, the Model Y in particular, will fall dramatically once they're actually producing them locally in Europe. It's a huge market. This is a smart move for them. Edward used the term like solve all their problems in Europe, like as if there's problems. Hello? I don't, what? And then of course there was also a comment that Europe's really hot right now. Almost the implication is that the demand for electric vehicles in Europe may not be sustained. Does Edward disagree that the entire world will be buying and driving electric vehicles in the future? This is an expanding market. The sooner Tesla's producing vehicles in Europe, the better. But it's not like there's a limited time frame in which they can sell their vehicles while the market's hot. It's just going to keep getting hotter and hotter and hotter until it melts everything in sight. Edward was saying there that he needs to know like what the plan is besides just building a factory. Can someone let me know in the comments below what more Tesla would need to do other than say, hey guys, we're building a factory which is going to dramatically decrease our cost of producing and therefore selling the Model Y in Europe, ultimately producing 2 million plus vehicles per year. That's our plan. We're executing on that exact plan. We're implementing new technology to drive the cost down, huge gigacasting for the rear and the front, then ultimately the structural battery pack, and we've also got a backup plan as well. Like, what more of a plan does he need? I don't understand. I really don't understand.
Their standing response to any sort of competitive question for years now has been, look, the more entrants, the better. It feeds awareness. It feeds adoption. It's a flywheel for the entire industry, and that will help Tesla. But as we start to talk more and more about share, I wonder which competitor or would-be competitor you're watching the most right now.
Well, Lucid just went public, and I think they're one that I've sort of watched for a while because I think they have a really interesting positioning in terms of being very similar to Tesla in a lot of ways, but kind of being a little bit more of an unabashed luxury brand.
Edward is right that Lucid are positioning themselves as a really premium luxury brand, but he was asked about competition, right? Lucid are not competing with Tesla. Even Lucid themselves point this out, okay? They're going for a much higher, small volume market of really luxurious, very discerning buyers who want unicorn tears in the wiper fluid and woolly mammoth pubes stitching in the seats. Tesla's goal is to continually drive the cost of their vehicles down ad infinitum with no end in sight, as low as they possibly can. The next vehicle Tesla's releasing that we know of is a $25,000 vehicle, and I suspect the vehicle after that will be priced around $18,000 and come out in the second half of this decade. Lucid aren't competing with Tesla. Tesla had to start in the quote luxury segment of the market, but even then Tesla isn't really producing luxury vehicles. They have some luxury features. They're not going all out with all the wankery that a typical luxury vehicle buyer is going after, because that's not their goal. Their goal isn't to sell luxury vehicles to rich people. Their goal is to transition the world to sustainable energy and transportation by making vehicles available to everyone who wants to buy one. This is actually a really important point to understand, because what people seem to be doing at the moment is conflating any company that plans to or is currently producing any electric vehicle models whatsoever as automatically being in competition with Tesla. Just like the $5,000 tiny death machine on wheels that's selling many tens of thousands of units per month in China right now isn't competing with Tesla. Yes, it is an electric vehicle, but it literally has no safety features and basically no range. It's a death machine on wheels. It's not competing with Tesla. This is going after a different buyer. Let me come at this from a different angle. I have a YouTube channel. Mr. Beast has a YouTube channel, but we are not in competition.
I think, a lot of people who buy Tesla are buying for the status.
Now, I could be wrong here, but I actually really disagree with this point. I don't think the average Tesla buyer is buying a Tesla for status. I think they're buying a Tesla either because they really care about the environment, or much more likely because they're just damn fucking cool. I personally believe that the average Tesla buyer is buying a Tesla because they're the best vehicle money can buy, not to status signal. Let me know in the comments below, if you happen to own a Tesla, what was the primary reason you purchased the car? Was it because you think they're really cool, you support Tesla's mission, or maybe you wanted to add a few inches to your micro penis, compensate for your short stature, or signal to the women that have rejected you throughout your entire adult life that you have something of value to offer, aka you've got money? Let me know in the comments below. Maybe I'm wrong. Maybe you're all buying them to status signal. I think Edward is making a major error of judgment here. I don't think a typical Tesla buyer is buying it for the status. Now, admittedly, many people who buy luxury vehicles do purchase them for status. This is different from culture to culture. Some people just love the high technology. Some people love luxury. Some people love the performance of these types of vehicles. I'm not here to judge, but there is a segment of the market who explicitly and specifically buys luxury vehicles just for status. But I don't think these are the type of buyers buying a Tesla on average. In my opinion, it is a major mistake to conflate a typical status-seeking purchaser of a vehicle for the type of person that's going to purchase a Tesla. Yes, there is a small amount of overlap there. But if your assumption is, well, once Mercedes releases their vehicle, Tesla's in big trouble because they're going to steal buyers from Tesla. If you think once Audi releases their electric vehicle or BMW releases their electric vehicle, it's going to take sales away from Tesla, you are gravely mistaken. These companies, these brands are not competing with one another apart from a very small sliver of overlap.
And really with Tesla, they get the status, but they don't get sort of the comforts and the creature comforts that sort of a luxury car buyer is looking for. And so I think Lucid is interestingly positioned there. But actually, having just sort of had our first chance to look at the Mercedes EQS, I think that is actually going to be a really, really tough player in this sort of premium and increasingly luxury EV space, just because it brings so much to the table that Mercedes has and that startups simply can't really compete with.
I don't know what else to say. Lucid are not Tesla's competition. Mercedes are not Tesla's competition. Who, in theory, is Tesla going after? They're going after the mass market, the Volkswagens and the Toyotas of the world. Yes, it's a process. They start at the high end. They're working their way down. Got a $25,000 Tesla just around the corner, and this won't be the last iteration. People don't seem to understand this, and it's really important to grasp. It's not about where Tesla is today. It's about where they're moving to in the future. And where they're going in the future is producing many millions of vehicles per year in the sub $30,000 range, and ultimately even cheaper than that. Now, I know there'll be a few people that have the counter argument, well, hang on a minute. Aren't Lucid going to start at $180,000 and then work their way down to the mass market just like Tesla? Well, in theory, that's the plan if they can even get to volume production, and I wish them all the best. But here's the question to ask yourself. Here's the counterpoint. If a company is entering the electric vehicle market with a $100,000+ EV as their very first model, and Tesla's already selling vehicles around $35,000, $40,000, with a $25,000 Tesla just around the corner, how does anyone ever compete with Tesla if Tesla's a generation or 2 or 3 ahead of where everyone else will be entering the market to begin competing with them? Spoiler alert, doesn't happen. Tesla will always be generations ahead. No one's catching them. Tesla's going after the mass market. They've won the race. They've won the decade. No one is going to beat Tesla to having a high quality $25,000 electric vehicle being mass produced and sold globally. No one's catching them. There is no competition. This is a done deal. It's over. Tesla is simply too far ahead. The fact that some people can't recognize this today, I find kind of puzzling. I mean, I can understand if you take a cursory glance, but if you're somebody like Edward, who has your finger on the pulse, so to speak, you're always tweeting about Elon, you're always tweeting about Tesla, you've even written a book about the company, and you still can't see this? I don't know, dude. Maybe you're just beyond help. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.